We're going to record on this. We're recording. All right. So good afternoon, everyone. How y'all doing? This is Josh Knoll. I am the owner of Gulf Coast Financial Advisors, located here in downtown Fairhope. I am a independent, fee-only financial advisor. But beyond that, I really consider myself kind of a business advisor. And in my role as a business advisor, obviously we have been dealing with a lot of the current, not only just the stock market volatility and crisis, but we've also obviously been dealing with the coronavirus. And as we've had to navigate through that, we've done our traditional role of being a financial planner, of being an investment manager. All that has been as important, or maybe more important than ever. But we've also had to kind of really pick up additional duties of reaching out to subject matter experts in my network for things such as, how does a independent contractor get a PPP loan? How does a single member LLC go and apply for an EIDL? The people, my clients, a lot of them hold real estate. What is going on in the real estate market, both in Baldwin County and Mobile County? So with that said, what I decided to do was to assemble a group of experts across various practices, across various expertise, and also in Baldwin and Mobile County. And we're going to talk about real estate. We're going to talk about investments. We're going to talk about insurance. We're going to talk about the PPP/SBA. We're going to talk about everything that is affecting the residents, the business owners, the employees, the employers of our part of the Gulf Coast down here. And so without further ado, we're going to start. Now the panel, if you all have seen on the invite, we have a panel of experts. We've got Melanie Bunton-Seymour, we've got Karen Simmons, we've got Brandon Hambright, Brian Harris, Michael Ori, and Jay Stubbs. And least but not least, we got me talking about investments. So we're going to start. I'm going to bring on Karen Simmons. If y'all pause for 1 second here. Promote the panelists. Okay. As Karen is coming on, Karen, she lists herself as the former CPA. I read that as reformed CPA, now a fractional CFO, co-owner of multiple businesses, which again, I'm gonna read between lines, means serial entrepreneur. And she's also a co-host with her daughter of a very popular podcast called Cheers to Business. So Karen, how are you doing today?
I'm good. Thank you for having me on.
Why don't you give the listeners, the viewers, a brief description of what your jobs entail?
My jobs are finding very smart people around me. I think that's my main job. Have payroll involved with my daughter, and we have a manufacturing company with my brother, manifolds and heat exchangers, and the podcast. I have an online course to teach people how to be in business, and I hold that in a class form when requested. I'm a fractional CFO. I go in, train your staff, teach you how to be self-sustaining, design your accounting, and then I'm there if you need me. So I'm just kind of having fun right now.
All right. Well, let's dive right into one of the particular roles that I know you've had your hands full. And I know you did this originally, honestly, I think in a little bit of an altruistic fashion. You were trying to help some of your fellow your business clients. You've been pretty involved with helping people walk through the PPP loan applications, the EIDL. Can you give the viewers of this webinar kind of a summary of what you've seen and what you think might be ahead of us, especially as it pertains to small business owners?
Well, the EIDL is now, they're out, unless you're agricultural. That opened back up for agriculture yesterday. I thought it was back open myself and filed for a friend of mine, and it came back the next day and said, no, this is just for agriculture. We're done. The funds are out. The PPP, I'm going to leave the lender discussion to Michael Ori because he's the expert in that area. But the PPP, now make sure you're compliant. I think everybody needs to review their payroll schedules. If you pay every other Friday, or make sure that you might have to move that last Friday, because the day that those funds hit your bank account, that's when the clock ticks for the 8 weeks, for the period that you need to pay at least 75% of that money in payroll. Now the other 25% you can do over 75, but minimum 75%, and then the 25%. Now, what I've seen is that a lot of people's rent and utilities, depending on where they work, don't make up 25% of that loan money, but they have less people now.
Right.
Now, another important on this is make sure your head count doesn't change.
Right.
Now, they came out and, got the whole unemployment, my people won't come back to work. Well, turn them in and hire somebody else. If they're getting that money and they could be working, to me, that's fine. I'm sorry, we're all working. We're all trying to make it. So, you can hire other people. Now might be a really good time for people to look at dead weight in their office. Who's been causing trouble? Who's been bringing morale, but you couldn't find anybody? I bet you can find somebody now.
That's a great point.
A lot of talent.
And Karen, when you mentioned the 75%, just so we're clear, what that means is if you spend 75% on payroll and related expenses, it could potentially be forgivable part of your PPP loan, correct?
Absolutely.
Right.
Absolutely. And make sure too what that cost is, because the FICA match that the employer pays does not count.
Very good.
But your unemployment, your health insurance, and your because you got 2 unemployments that you pay as well. So all of that can be added to your payroll cost, because that's how the calculations went.
All right, very good. Well, I'll tell you what, we're gonna slide you back. Stay ready. There's gonna be a bunch of questions, and we're gonna bring Mr. Brian Harris on here. Thank you very much, Karen. All right, Brian, get warmed up. Get your jumping jacks in. All right, as Brian's coming on, Brian Harris is the broker and CEO of, Harris Vacation Rentals and Harris Realty Group. He has a particular specialty. He does quite a bit of work down along the beaches of Alabama. I'll let Brian kind of describe, the number of units that he manages. It's substantial. Gulf Shores, Orange Beach, but he also has a multi-yeared and wide faceted experience with real estate, especially here in Baldwin County. So Brian, how are you doing?
We're good down here on the Gulf Coast.
Yes, we're hanging in there. Why don't you give the watchers of this webinar just a brief background on you and what the Harris Property Group does?
Yeah, so Harris Vacation Rentals, Harris Realty Group, we are a full real estate brokerage. One of our main focuses is on property management and investment. So we're helping the beach home owner, the beach condo owner get the most out of their property. That's on the revenue side. That's on an asset protection side. And then on the real estate brokerage side, we have agents helping people buy. A lot of our business is focused on the second home or the investment property, but we also do some primary residences as well.
Perfect. All right. So you and I, just so the listeners know, if you want a more in-depth conversation after you get done with this, Brian and I have released a couple of fairly lengthy 30, 40-minute webinars specifically on the real estate market along the lower Alabama. But for the sake of this webinar, Brian, I want to ask you, what is going on with the investor side of real estate along Alabama beaches? What are you seeing? And also, if you don't mind, compare and contrast that a little bit to Florida, right? At the state line.
And that's one thing we were talking about a little bit before the call began. In Alabama, the beaches are open. We do have some social distancing regulations. We've seen massive increases in bookings the last 7-8 days. I think we were 260% above where we were same time last year over the course of the last 8 days. So we're seeing a huge amount of demand, and we were expecting that. As soon as the beaches were open, we were expecting a huge demand. I think this even outpaces what we were thinking. Another thing that we're seeing is that we're seeing a lot of people book for May. In our industry, a short term or a last minute booking is kind of like 2 weeks out. We've created a new term, ultra short term bookings. We're talking about tonight, tomorrow night, very hotel-esque. And that's put a little bit of a strain on our infrastructure, but we're working through it. We're glad to be working. We're glad to be hosting people down on these beautiful beaches. We've had great weather. We're taking a lot of precautions for our people and for our guests, making sure we have updated cleaning procedures. We're doing pre-arrival disinfecting for each guest because we want to make sure everybody's safe. Comparing that with Florida, they've got a full vacation rental ban, and they really don't have an open date, listed yet. It's kind of an indefinite ban right now. we're seeing, so that you've got two very different situations happening right now. You've got Florida, their vacation rental, their second home, their investor condo, that investor home market is really struggling because they can't get anybody in their houses. The Alabama side, we had 6 weeks where the lights were shut off, but the lights are back on now, and we're seeing a lot of people return to the beaches.
Well, so for one last question for you for now, if you're an investor looking into Alabama rental property, what's a couple key notes that they need to be thinking about right now? Somebody reaching out to you.
So on the buyer side, what we're seeing is we're tracking this, and I can send slides out to anybody if they want to email you or me at the end, because we've got a full presentation on this. We predicted and we've seen price reductions in the market, and we've seen a healthy market because we've seen buyers ready to make those price reduced homes under contract and pending. And we're also seeing those go all the way to closing. So we're seeing a healthy market, but we are seeing a more aggressive seller. So I would say a buyer or a potential buyer needs to, look at your finances, get ready. I think there's going to be more price pressure in the next weeks. And I think there's going to be more price pressure in the next months as the massive amount of unemployment, basically catches up with these, secondary investment properties.
Perfect. Very good, man. Thank you very much.
Yeah,
We'll be bringing
absolutely.
you back here in a minute. All right. We're going to go to Jay Stubbs if he's available. He's the one speaker we have today that's out and about. So he's juggling a few things. As I'm bringing Jay on as a panelist, Jay Stubbs is the regional director, and I believe his official title is vice president now of for First Protective Gulf Coast Market. Do I have that right, Jay?
We'll take whatever you want to give me, Josh. Really, just and truly, I'm a risk management expert who's working real hard and trying to get everybody covered and take care of producers and advisors like you. But
Yeah.
if you want to call me a VP, go right ahead. Just don't
I'll
compare
do
me to any former VPs that might be running for president right now.
Well, I'll call you Mr. Jay Stubbs. That's what I call you on the podcast that we co-host. Every dollar counts. So, Jay, I wanted to bring you on because I think it's fair to say that unbeknown to let's say the average public investor / insurance carrier, there has been quite a few fairly significant things going on behind the scenes, if you will, with life insurance, disability income, and particularly long-term care. And I wanted to bring you on and see if you could kind of summarize that, let folks know some of the things that are changing and what that means to them.
All right. So what I'd like to inform those that are part of this panel as well as those listening, life insurance underwriting as we know it has completely changed. I've been in the industry for 21 years. We were starting to see a gravitation for really healthy people to get through the underwriting process much quicker pre-COVID-19. And we're still seeing that. In fact, we've seen a few life insurance companies actually increase their face amounts for what we would call fluidless underwriting. So if you're a healthy individual under the age of 50 and you're looking for $1 million, sometimes even up to $5 million of coverage, whether that's a family need or a business need, we have, Josh, you have access to over 15 different life insurance companies. A good handful of those, or if you're squeaky clean, looking for $1 million to $5 million, you can potentially do that in a fluidless underwriting capacity. The way they're doing that is they're using big data. They're using your motor vehicle reports that you authorize them to look up. They're using your prescription history check that you authorize them to look at. They're using a medical information bureau, an MIB report. And then they're asking you a series of medical questions through a telephone interview process. Once they compile all of that, if you're not taking any serious prescription meds and you're not in an unhealthy state, you could potentially get fluidless underwriting, meaning no blood, no urinalysis, and knock that out. Sorry about the wind. I can't control that.
Oh, you're fine. It's not. We don't hear it, Jay. You've got good.
Okay.
Yep.
So, but the flip side of that underwriting coin, if you have some sort of health concerns in your most recent past, let's call it 10 years. And I like to think of the big four: cardiac, cancer, stroke, diabetes. I also will throw in there any pulmonary issues. Think of that as lung. That's a really big deal to a life insurance company right now if you've got health experience issues with that in the past, or if you're taking any prescription medication that is potentially suppressing your immune system. They're really taking a look at that. I've seen some very what used to be normal cases get postponed. If you're over the age of 50, 55, or 60 for a number of different companies and you have experienced any of that stuff, they just kind of want to take a wait and see approach for you in life insurance underwriting right now. Again, we've never seen anything like this where if you had some sort of issue 7 years ago, but the doctor said, hey, you're in remission, or you're all good, you're free and clear. It used to be that you would be maybe a standard or table rate. Now you're a postpone. So that's a change in our industry that we're seeing.
Perfect. Very well said, my friend. All right, I'm gonna bring you back here shortly, so hang tight if you can.
Absolutely.
All right, next up on my list is going to be Brandon Hambright. Brandon is the mortgage advisor and the branch manager of American Home Lending over in Mobile. Hopefully he's got his audio figured out. If he hadn't, we'll jump back out. But Brandon does mortgages, a lot of them, and I think he's got some pretty important information to share with us on that. Brandon, can we hear you? Let's unmute you real quick. All right, let's see what you got. Oh, there you go.
Can you hear me?
We can hear you. Great. All right, Brandon,
Okay.
tell folks what you do real quickly, and then I got a couple questions for you.
So look, I'm a mortgage advisor here with American Home Lending in Mobile. Have been doing mortgage business in many different roles for 20 years now. And I'm a residential home loan expert. I work closely in hand with consumers who are financing a home to buy property, who currently own a property, to help them minimize the cost of owning that property during that time, and work with them to eliminate that liability whenever they choose, or as quickly as possible, through using different mortgage loan products that we have available.
All right, so here's my $1 million question.
All right.
Things have changed pretty rapidly in the mortgage industry. Fair?
Sure.
Yeah, because
Absolutely. Just like Jay was talking about, the underwriting for life insurance has been fundamentally changed. The underwriting for mortgages is changing fundamentally and changing every day. So staying on top of that certainly is a big job. There is, many different agencies who are guaranteeing and insuring the mortgage loans that we use for purchase money and refinances. So there's a lot of information to stay on top of. And there's a lot of regulatory changes that take place that gets implemented in a guideline level, depending on what agency we're using. And then that is interpreted by each individual investor, who is writing those loans. So, staying current on those is absolute necessity, especially these days. It always has been, but these days it's a daily class almost. So you can be able to help your clients navigate, different products and their transactions, as efficiently as possible.
I have two questions for you.
Sure.
Interest rates. What's going on? Well,
a whole lot. So over, probably since the beginning of the year, end of 2019, interest rates were great. The beginning of 2020, we saw a jump in mortgage-backed securities, but a large decrease in interest rates. And it really kind of centered around, the assassination of General Soleimani. There was an expectation of war breaking out, and a lot of foreign money and whatnot was looking for safe havens, and a lot of it got parked in mortgage-backed securities, drove interest rates down to record levels. And at that point in time, refinances applications went through the roof. And that was the first week of January. The last week in January, then Brexit broke, all right? And then there was a large disruption in the EU, which exacerbated the problem over there, and which flooded, the money for treasuries and mortgage-backed securities to an even greater degree, and drove interest rates even further down into the twos, even on 30-year loans. So those refinances started happening at breakneck speed, which caused some problems, all right, because it drove down the loan servicing value of these mortgages because there was no expectation that they were going to get paid off in droves. So a lot of servicers were getting hit with payoff after payoff after payoff, and which translates into losing money for them, which is great for homeowners, but really bad for loan servicers. So they were losing an appetite for, buying those type of loans that were getting refinanced so quickly, all throughout January and February. It was, they were losing money like crazy. So, and that happens a lot with the government-backed loans, FHA, VA, USDA, because they're really easy to refinance. Most of the time, there's no appraisal required, no income documents really required, and it can take place in a matter of weeks. So those payoffs happen at breakneck speed.
Perfect.
Then our coronavirus broke out, all right, which caused another pandemic, or which caused another crisis in the mortgage-backed security market. So that further drove rates down, and they plummeted. But the problem is that investors, weren't interested in buying the mortgage-backed securities anymore. So that rate sheets were blank. People stopped taking applications, and nobody knew what to do in the mortgage industry on the investor level until the Fed stepped in, thankfully, middle of March, and helped stabilize things to the point where we're at now. And they restored some liquidity to the market, and investors could understand and know what to expect and have some confidence. So interest rates are still at all-time lows. Based on the mortgage-backed security market, they should be even lower, but because the loan servicing value is compressing the margin on the back end for loan aggregators and wholesalers, they aren't as low as they should be, but they're still low threes, high twos. It's an unbelievable market for people buying a new home or for anybody who has a mortgage, and to minimize the cost on the loan if they're able to qualify. So coincidentally, most people can't take advantage of this because they've been furloughed, laid off, having some sort of, break in their employment or their income, which is preventing folks from taking advantage of it.
Perfect. I'm going to save my second question for you when you come back. So that's a fantastic job of summing that up.
Yeah.
All right. Hang tight. Be coming back to you here shortly.
All right.
Okay. Next up is going to be Melanie Bunting Seymour. She is the founder and broker of 1702 Real Estate. That's a firm over in Mobile, Alabama, for those y'all familiar. How you doing, Melanie? The dreaded mute button.
How are you?
So we're doing great. Thank you for joining us. So if you wouldn't mind, tell the watchers what is 1702 Real Estate? What do you do over there?
Yeah, absolutely. So 1702, first of all, is the year that Mobile was founded. And I opened the brokerage maybe about 3 years ago. I've been in some form of the real estate facet business for the last 15 years, whether it's been a lot of renovation, and then here lately we do a lot of sales since I opened 1702, and less renovation, but we do design consulting and home staging as well.
Perfect. All right. So for now, just so you understand, we do have locals. I recognize some of the names that are attendees, but we do have enough of a network that we have people paying attention. As you know, this part of the United States has become a go-to destination for multiple reasons, right? And so with this webinar, we're going to have people paying attention and listening to this are not necessarily from here, or maybe not even completely familiar with the area. I wanted to let everybody know that I brought you on specifically because you are pretty entrenched in Mobile, have a many years and depth of knowledge there. And then we also have Baldwin County across the bay, across Mobile Bay, that Brian Harris has been speaking to. They are similar markets, obviously. I mean, it's not like it's the Golden Gate Bridge between the two areas, although we treat it that way, but there are some differences. So can you kind of lay out what's been going on specific to the Mobile market and the housing market and everything you're doing?
Yeah, absolutely. Honestly, Josh, I have not seen a ton of change in the Mobile market. And I'm not sure if it's the fact that a lot of things, real estate takes several months before, you're on the market, and then you close and you get all that done. So I'm not sure if it's because that everything was already in motion before COVID came, or if we're really not seeing a change. People are still buying and selling. What I call essential housing, which would be like a $400,000 and under property, are flying off the shelves. As long as they are prepped well, they're priced well, they're going. Now, what's sitting a little bit are larger properties, things that are over $500,000. I haven't had a lot of activity on those listings, and from talking to other agents and brokers, it's kind of been the same thing.
Well, historically, for the 500 up, was that a lot of small business people that would buy those homes?
Yes. Okay. So that's the only thing I can think of. Well, besides the fact that the jumbo loans, which we can ask Brandon about, but the lending on those has definitely tightened, and some people aren't even doing those anymore. But I think the people that can afford those are going to be your business owners that are, worried about keeping their businesses afloat right now.
Well, two questions for you, or one question with two parts. Mobile, Alabama, as opposed to Baldwin County, is the market more remodel, new construction? What keeps you the most busy when you're listing residential real estate?
I would say that Mobile is more of an older property. So we do have new construction coming, although new construction is down now this month, for sure. But Mobile is mostly renovation and older properties.
Very good. Okay. All right. Anything that someone coming in looking for a property and what you deemed 400,000 and below, anything in particular that you're seeing that they should be a little bit more prepared for as opposed in the past, outside of just the whole distancing thing? Is there any piece of advice you have for that person coming in and looking for that price range in Mobile?
It's really important to make sure that you have a real estate agent that's familiar with the area, and also that you're using a local lender. Things are changing so quickly that it's really important that the person that you're working with is super knowledgeable about exactly where you're looking and what you're purchasing.
Perfect. Well, I think we got one of them on this panel, right?
Yeah.
We do with old Brandon. All right, Melanie, hang tight. I'll be bringing you back here in a minute. All right. And we got next up is Michael Orey. Get back here. Michael Laurie. Mike Laurie is the Vice President of Commercial Banking for Community Bank. You're in the Daphne branch, right? And there for a short time period, for about 2 or 3 weeks, we thought we were going to have to send out a search party for Michael, because when the onslaught of PPP loans hit, he basically was locked in a basement at the bank and had to process applications over and over and over again. I'm being a little silly, but Michael, catch people up to speed. What's your life been like the last few weeks?
7-day work weeks. We took off for Easter Sunday, and that was about it. 10 hours on the weekends, 12 hours during the regular week. In at 5 or 6, out at 5 or 6. And proud to say we've probably saved over 500. Personally, myself, I've saved over 500 jobs with this lending. I've done over 120 loans, given out over $6.5 million in just a few weeks, which is, for anyone who's familiar with any kind of lending, those are just insane numbers. But and right now they're all being backed by the SBA. And as Karen spoke about, there are certain guidelines that the SBA is requiring be followed. But unfortunately, we do not have our guidance yet from the SBA as far as what we are going to need in order to prove for the forgiveness. So what we are advising people to do, for example, if you get a $100,000 loan, that the requirement is for 75% of it at a minimum to go towards the payroll. So immediately carve it out. You can put it into a separate checking account so you're not commingling your funds. That way how much money you have to spend. And then if you go above that, great. You can dip into the other 25%. But if you're under that, then you have a portion of money that has not gone towards its intended purpose that you can turn around and repay without having to get stuck in a 2-year loan. Granted, those loans might be at 1%, and they might be looking to do that because you're not going to really find that cheap money anywhere ever again.
Ever.
But, that is for individual people and business owners to decide on a case-by-case basis.
Well, I have 2 questions for you. One, is there any PPP money left?
As of right now, there is. We're looking at about $100 billion left, actually. So
100 billion with a B. Okay. Yep. All right. Now, second question is, because I know we're going to get asked this at some point on this discussion or later in the conversation, you have done a great job of being aggressive and helping your clients out. Is Community Bank and Michael Ori willing and able to take on non-bank customers to apply for loans? And I don't mean to put you on the spot. I'm just asking.
Oh, about 90% of the people that I've helped over the last 4 weeks have been non-community bank customers. So yes, the answer to your question is we take all comers.
Okay.
A lot of banks have stopped taking applications. I tell people, look, I've got a stack of about 30 more on my desk. I will be more than happy to take your application. I cannot guarantee the funding will be there by the time I get to your application. But that being said, applications that I entered this morning, they go, as soon as I get it entered, it gets reviewed internally within 10 minutes. And then usually within 30 minutes after that, you have an E-Tran approval. And once you have an E-Tran approval, regardless of what you hear in the news, the money is yours. It's there. It might take a few additional days to get you the money in your hand, but it will definitely be reserved at the government level once you have that E-Tran approval. And because we have gotten through the log jam, we're now getting those turned out in less than half a day.
Love it. Perfect. All right, Michael, I'm going to drop you back in the attendee bucket. I've got a couple words to say, and then I'm going to bring everybody on. So good job. Thank you very much. Okay, before we bring everybody back on, I'm going to say my little piece. Again, obviously, I am Josh Nolan with Gulf Coast Financial Advisors. I'm an independent practice located here in downtown Fairhope. I'm going to be pretty succinct here because I don't want to sound overly negative. I definitely don't want to sound like Dr. Doom as it comes to investments, but I will say that we definitely have turbulence ahead of us. My recommendation to everyone is this may sound self-serving, but if you don't have somebody by your side that has an advisor, an official advisor capacity, or maybe just somebody, a friend or family member that has been through 2008 or 2001 or any of these significant downturns, I would reach out to somebody because there's going to be certain things that you can do in your portfolio that you can never fully protect yourself from a market that drops 20, 30% unless you completely pull out of the market. But as long as you've got the time horizon and you've got the ability to come back from this, you still want to do some certain things so that you're not taking the elevator down and then having to walk the stairs back up. So I'm going to leave that. This webinar is really about not what I do, other than simply understand that what you all are seeing is a piece of the incredible dynamic network I feel that I have at my fingertips for helping my business owner and self-employed clients navigate all of this stuff. And it just so happened that I already had this stuff in place. We just had a global pandemic and a stock market crisis that elevated the importance of the entire team that I had assembled around me. So with that said, I'm gonna bring all the panelists back on together, and we're gonna open this up for questions. And while we're doing that, I'm going to try to do both and read my disclosure. Let's see here, promote the panelist. Those that are watching, if you have questions, you can, if you'd like to ask it in real time, raise your hand. I'll give you the ability to talk. If you want to type it, I will do it that way. We have both chat and Q&A. And did I get everybody? Okay, all 6 of you. All right, let's see. First, what I want to do while we're getting assembled here, I want to just go kind of round table real quick as we start winding this down. And if you all would, again, say your name, say the business you work with, and then just where do you think we go from here in your specific line of work? And not necessarily just from, we all got to have hope. I get that. We all got to, hopefully can get back to work in a safe environment. But, we're all adults on this, and we're all experienced in our individual line of work. And people are looking for us for some guidance. Somebody walks up to you and they say, hey, in your line of work, I know little about it, but there's some things I need. What should I be aware of, and what should I be concerned about? What should I be hopeful about? So, Karen, I'm gonna go ahead and give you the floor first, if you don't mind on that. Oh, let me unmute you.
Got it? Okay. I think now's the opportunity to educate yourself. Educate yourself on the basics of business, make your business better, reinvent it, turn it if you need to. I think it's the perfect opportunity for that right now. If it's working out better, doing it a different way, then that might be the way you need to do it. I know that I'm posting daily on CFO Consulting Services, and on my site I have a blog on how to keep up with some of these compliance issues. It's what I've done for 20 plus, long time. And so, you know, you can play any game as long as you know the rules. And so make sure you know the rules or find the people around you who do. And use your people. Make it a village.
Make it a village, make it a tribe. Brian Harris.
I think the biggest thing for us is right when this all happened and our business shut off like a light. I mean, it was overnight that it really affected us. And one of the first messages that we sent out, we've been doing video updates with our owners. I said, and I still am saying, if you can't get by with 50% of the rental revenue that you were looking for, either in past years or we projected for you, then call us and let's have a conversation about what we can do to make this a safe investment for you and what our options are. And that's still what I'm saying. For Alabama, it doesn't look like it's going to be that stark, but that's what we're telling our owners just to prepare.
Right. That's good advice. All right, Brian Harris, Vacation Rentals, thank you. All right, Jay, did we lose you? Jay's hanging tight on the golf course.
Keep in mind, I'm not playing. I'm watching my boys play. So two things that I would encourage people that are listening to do. First and foremost is what we call a beneficiary review. Now's a good time to go through all of your planning aspects, whether it's your qualified plan, 401k, IRA, Roth IRA, SEP, it doesn't matter. Make sure that the beneficiary designations on there are what you want with respect to your intent of where that money should go in the event of a premature death. And the second thing is beneficiary review of all your life insurance policies. Make sure that all of that's accurate. I'm seeing a lot of people reviewing that in a life policy review, and they're realizing, hey, that's not what I wanted it to be. Also, they may realize that a needs analysis needs to be updated, so they want to get some additional coverage. Keep that in mind from the original points I made earlier in this call and this webinar. Underwriting has changed, so if you've got something on your mind, you need to start asking the proper life insurance credential folks today. And then last little point of I guess advice is to do an audit of all your inventory of stuff that you need to protect. So think about your property, think about your retirement, think about your family, think about your business, your legacy, and your estate. And then, of course, your health care as you move into retirement years. Lots of things that you can accomplish in all 7 points of a protective audit.
Perfect. Thank you, Jay. Brandon Hambright, American Home Lending.
It just occurred to me that I think one of the most important takeaways from that folks are going to have that are listening to the call that own a house or don't, they're keenly aware of how important their home is now that they've been locked down in it for 30 days or 60 days. I hear from many of my clients that they understand the value of the home that shelters them and their family, and it's very important. And they're keenly aware of how important it is. But also the planning for unexpected events. We're all going through an unexpected event together. Fortunately, some are not as impacted as greatly as others. That some that are impacted to a great degree are getting some relief, hopefully, from the government and from their employer, and they're being helped along because it's affecting everybody. But in the future, unexpected events are going to happen to everybody personally, and it won't be with everybody else, and there'll be nobody to bail you out. So make sure that the buffer account that you create to insulate yourself from unexpected events, especially when it comes to some of your major expenses like housing and insurance and things like that can't go unpaid, that there is a buffer zone in place. So that really is, I think there's a laser focus on that for us as a nation, and everybody should learn that. I hope that's their takeaway. And then also the mortgage industry is very strong. I believe that home finance is going to be a driving force in the economic recovery. The housing industry is going to continue to be strong. Are we going to go through some challenges and have to overcome some obstacles? Of course we are, and we don't even know what all of those are at this point. But I believe very strongly in the housing industry in America, and I think that we're going to overcome.
Perfect. Very well said. Thank you, Brandon. Melanie Bunton Seymour, 1702 real estate.
Hey Josh, following up on what Brandon was saying, the housing market is strong. I think that we're going to have a delayed spring. Spring's usually the hottest time to sell. I think it's going to be more of a summer push, and that'll be great. And maybe that'll be even bigger, than a normal springtime. So, we're definitely not going to have any issues like we did in 2008. The bottom line is supply and demand are still evident in our area. And I think prices are going to stay up. And, if you're looking to sell, it's a great time. Interest rates are low. If you're looking to buy, it's a great time. So just talk with a knowledgeable agent and, make some decisions that way.
Very good. Perfect. Thank you. Michael Laurie, Community Bank, Vice President.
Yes, sir. I'd like to kind of echo what Karen was saying. As we're going through these uncertain times, especially for the small business owners, and especially with no guidance forthcoming at the moment from the SBA, I'm seeing a lot of small business owners who are having a lot of frustration because they bank with these larger banks and they get put into a 1-800 number. They don't have anyone that they can call directly to help guide them and help them get through this process step by step. Now, will most of them end up being okay? Probably. But will their frustration level be through the roof? Absolutely. So my advice to especially the small business owners out there right now, if you haven't done so already, establish that relationship with your banker, whatever the bank is that you work at or work with. That way, when it comes time for you to try and navigate the back end of this whole process, you have someone there who can walk you through it step by step, as opposed to just trying to guess and deal with a random person every different time you're trying to make a phone call and not really knowing what's going on. Because one of the biggest frustrations is the lack of knowing what the future holds and not having anyone there to help guide you and point you in that direction.
Very good. Okay. All right, I'm going to say my piece, and then we'll end this. From my standpoint, on the investment side, Jay's heard me utter this term before, but I think what we're going through is the great index reflex. Now, this webinar is way too short for me to go into total nerdville on what I mean by that. But part of the reason that the downturn was so exaggerated was the prevalence of indexing. And part of the reason, on the flip side, part of the reason that things have kind of held serve to a certain degree has been the tremendous trillions of dollars of money flowing into indexing strategies. I'm not saying that in a judgment. That's not a good, bad, or indifferent statement. I'm just telling you that is what you are seeing is a handful of companies, primarily tech companies, basically elevate the market into, I don't want to say a false sense of security, but definitely some of the fundamentals and the percentages don't match up with what is actually going on with the market. So with that said, I would tell, and as I've told my clients and anybody that reaches out to me, I don't know if I would necessarily look to corporate America for the ones that are going to be the guiding light out of this potential recession or maybe this V-shaped recession, U-shape, whatever we go into slowdown. I wouldn't look to corporate America. What I would look to is Main Street America. And once you see Main Street America back to work and you start seeing the capital flow again, the stock market is going to become a little bit detached to that, because these companies have gotten so huge, there's a little bit of a lag effect on their earnings and the things that they deal with. They're probably, right now, Main Street is suffering. Corporate America is not, as much. And I think that's going to flip. Pay attention to Main Street. Pay attention to your neighbors. Pay attention to the guy down the road that's got the real estate company or the mortgage broker or the vacation rental property or the plumbing shop or whatever it may be. Pay attention to what that person is doing. That's going to be more your canary in the coal mine than anything that the large companies are doing out hand, especially here on the Gulf Coast. So with all that said, I think we're going to go ahead and wrap this up. We ran a little bit long, but I think we did a great job. I want to thank you all for joining us, the panel discussion here. We have recorded this, so we'll be releasing this and sending it out. You all are more than welcome to use it at your discretion. Everybody nailed it on the head. You all did a great job. So I've got to do one little thing for compliance real quick, if you'll pardon me. Advisory services offered through Prime Capital Investment Advisors, a federally registered investment advisor. The following commentary and responses are the opinions of myself, Josh Knoll, and the panel, and are not necessarily the opinions of Prime Capital. They are for informational and educational purposes only and are not and should not be considered investment advice. Past performance is no guarantee of future results, no guarantees expressed or implied. If you need professional tax guidance, reach out to a professional tax person. So, are y'all? That's all I got. I think you did a great job. So, thank you all for joining us. Attendees,
Thanks, Josh.
for joining us as well. And we will talk to you again soon.
Bye.